Hey everyone, welcome back to the channel. Today, we're diving into some essential trading concepts that separate amateur traders from professional ones. Support and resistance, liquidity, smart money concepts, SMC. These are the foundations of price action trading. If you understand these, you can read the market like a pro, before indicators, before charts, and before guessing. By the end of this lesson, you'll understand how to identify key levels, where liquidity sits and why it matters, how smart money moves the market. 1. Support and resistance. What is support and resistance? Support is a price level where buyers step in, preventing the price from falling further. Resistance is a level where sellers step in, preventing the price from rising further. Think of it as support equals floor, resistance equals ceiling. How to identify S&R. Look for historical highs and lows. Pay attention to areas of consolidation or price stalled. Use round numbers. For example, $50,000 on BTC often acts as psychological levels. Why S&R is important. It helps identify entries and exits, shows where the market is likely to reverse or pause, forms the basis for liquidity and smart money analysis. 2. Liquidity. What is liquidity in trading? Liquidity, it refers to where orders are sitting, areas where the market can be sucked in to trigger stops. Stop-loss orders above resistance or below support create liquidity pools. Smart money hunts these pools to accumulate or distribute positions. Why liquidity matters. Price often moves toward liquidity before a reversal. Understanding liquidity helps you avoid stop-hunting traps. You can spot potential breakout zones before they happen. How to spot liquidity. Look for clusters of previous highs or lows. Watch for long wicks on candles, often liquidity grabs. Identify obvious supply and demand zones. 3. Smart money concepts, SMC. What is smart money? Smart money refers to institutional traders, hedge funds, and professional market makers who control large amounts of capital. They don't just buy or sell randomly, they move the market strategically to collect liquidity before big moves. Key smart money patterns. Order blocks, a candlestick or group of candles where smart money entered a large position. It acts as future support or resistance. Liquidity grab or stop hunt. Price pushes to obvious highs or lows to take out retail stop losses, then reverses in the direction smart money wants. Break of structure, BOS, indicates a trend change. It occurs after liquidity is collected and smart money shifts direction. How to use SMC. Look for order blocks as entry zones. Trade after liquidity grabs instead of fighting them. Align trades with trend and structure. 4. Putting it all together. Here's how S&R, liquidity, and smart money connect. Support and resistance shows where price reacts. Liquidity shows where stops and orders are sitting. Smart money uses S&R and liquidity to manipulate price and accumulate positions. Example. Price is in a bullish trend. Resistance is liquidity above. Smart money pushes price above resistance to take out stop losses. Price then reverses back down, which you can use to enter with the trend at a lower risk level. 5. Key takeaways. Support and resistance is market's reaction zones. Liquidity is where stop losses and orders sit. Smart money concepts are professional market manipulation patterns. Always trade with the trend and respect SMC. Indicators are optional. Structure and liquidity tell the real story. Outro. That's it for today's lesson on support and resistance, liquidity, and smart money concepts. Master these, and you'll start thinking like the market makers instead of guessing. Next lesson, we'll go deeper into order blocks and how to time entries perfectly. See you in the next one.